Hi, this is Jeffrey at Graphfinancials. So today we're going to continue to talk about the Ant Group from Alibaba. And we are going to review a bit about the history of the company. Then we're going to talk about the subsidiaries. And maybe we should start with the antitrust fine of Alibaba, the fines that we were talking about. All right, so the Chinese antitrust regulator has applied some fines on the choosing one from two practice under which merchants are required to sign exclusive cooperation pacts, preventing them from offering products on rival platforms. That's basically 101 exclusionary practices. So they were sued by Gallants, and that company is a manufacturer of appliances. And they were also sued by JD. A lawsuit from clients is taken very seriously by antitrust regulators. By competitors, you never know if they just want to bother the competitors or if they really have some sort of claim or problem against the company. Now, there was a fine in November 2022 by the central bank against Alibaba, mainly disorderly. You can pause me and read for your own. Disorderly expansion of capital and the corresponding financial risk. It wants freewheeling businesses that could cause those financial risks. Okay, so a lot of people were saying, well, this is political, this is against Jack Ma, this and that. Cannot exclude that, but we see a pattern not only at Alibaba, at the Ant Group, but in other companies. There was a bit of between 2020 and 2022, a bit of wild east in terms of micro-lending. And let's look at the segments. Segment has, let's look at the subsidiary of the Ant Group. Ant Group has Alipay, which is the wallet app to support and accept payments. Huabei, MyBank. You can read all of those. You can pause me and read all of those. There are quite a few subsidiaries. The segments, there's obviously the payment system. Okay. And there is, which is reaching 118 trillion renminbi, yuan. And they developed into the largest money market fund, okay? And obviously they get some user data, and they went into micro-lending. And the micro-lending went up a lot. And there are other companies, JD, there is also some companies which, Lufax, which are in this business. And there's been a change as part of the Beijing efforts to control the country's debt risk, also set a new requirement for online micro-lenders to provide at least 30% of the loans they fund jointly with banks. Sorry. So basically, those platforms were doing a referral and placing those loans to the third parties, and there's been a bit of a binge on that, which could explain why we are in new shape. And we have seen in another company that they have turned a lot into their policies. They've changed their policies of small business lending, tightening with peak of tightening back in Q4 2022, and pretty serious tightening in Q1 for those companies providing loans because of change of regulation. So the recent interaction with regulatory agencies has shown that regulators are willing to step up on their effort to balance progress with risk by enforcing what is believed to be a sustainable way to deleverage financial risk. So basically, the problem was that there was a bit too much of a binge on the on this business. Now, in 2020, Jack Ma wanted to IPO Ant Group, but it was stopped, and they were asked to do some changes, and the changes were the origin of the problem. Now let's look at the changes that were required. So they blossomed into a lot of things. They went into payments, lending, wealth management, insurance, encroachment onto the existing financial industry. Not very welcome, because they ended up with the largest money market fund, and the regulator wanted this money market fund to be shrunk, okay, to get a bit less giddy on that. That is very interesting for our purpose. The antitrust regulator wanted to give more options in payment methods. That's what we like, MasterCard monopoly. More options in payment methods, and removing unscrupulous tricks to get users into getting loans. It's pushing the loans. So those were the grievances, and the regulator said, okay, we need sound governance structure, regulatory requirements, because now they have to have a bank holding license, illegally engage in arbitrage, excluded competitors using its market advantage, and hurt consumer rights. So you have two things. You have the antitrust case on one hand, on the exclusionary practices. You have also on the antitrust some concerns about the options of payment, and then you have the regulatory, which is this micro-lending thing. The practices are a bit not a bit pushy on that. So those were the recommendations from the regulator. So get back to your roots, get a license for the credit businesses, protect user data privacy, establish a financial holding company to ensure they hold enough capital, revamp the credit, insurance, wealth management, and other financial businesses according to the law, and step up compliance on securities business. So it grew a lot. All right, so that's where we are on the Ant Group. Next time we're going to talk about the history of the company, and we are going to start to go into the valuation. Thank you very much. Bye-bye.